Taiwanese index managing to hold on to gains of 0.4%. Hang Seng holding on to gains of 0.2%.
Expect at least the indices, broader global indices, the big ones, to be volatile going into the US election. Nifty is down about 0.25%, 24,260. Nifty Bank is starting at about 51,600. It's down about 0.1%.
Last time he was president, he was actually fairly good for the business and the economy.
Indicating is that people had held back their purchases as they were entering the festive zone.
Continue to be bullish on Africa and reasonable in neighboring countries.
About the Nifty, now it has fallen below the 23,900 mark.
EV motorcycle will likely serve urban riders, reflecting a shift towards the practical city riding over the adventure touring.
Wednesday morning, 6:30 a.m. our time, majority of polling stations in the US should close.
The downfall continues, though it has stabilized somewhat from the levels that we've seen. But of course, it's not like a big recovery that we've seen.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, very little by way of a recovery, and the markets remains down almost 400 points. I mean, we're 20-30 points short of that number, but one way kind of a downside is what we've seen through the course of the day. Lows have been broken. The 5th of August low, which at least in the morning it didn't look like it would come into view. That I think is also gone. At least intraday we were trading below it, and I think we should be around it as we speak. We're coming to you from the CNBC-TV18 Motilal Oswal studio. This is Closing Bell. I'm Prashant. With me, my colleague Surbhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. Well, folks, for what it's worth, at least from the lows, this is a 100-point recovery that we're seeing, because at one point in time, around 12 o'clock, it was looking like a yawning gap. It was a 500-point decline. So we've kind of pulled back a little bit. But having said that, there's no taking away from the fact that this has been an extremely weak start to this week.
Well, indeed, volatility is likely to pick up, as Prashant mentioned earlier this morning as well. In a couple of these PSU banking names, actually in the last 30 to 40 minutes, they have come back to life. You pull up the intraday chart of, say, a PNB bank. The PSU banking index is cutting its losses. PNB is doing quite well. SBI as well has pulled back from the low point of the day. So it appears some of these stocks that have actually seen some bit of a correction. There's a good pullback is what we've seen. Just take a look at that. Good up move is what we're seeing. I think SBI's numbers later this week are going to be very, very important, because the markets are nervous about the state of the economy as of now, whether or not there's a slowdown. So SBI's numbers, not just the numbers, but the commentary as well, will be extremely crucial. Bajaj Auto's numbers as well were weak, and that's what's caused, again, a bit of a ripple in terms of sentiment. So keep an eye out on that one. It's down another 4%. All that recovery post, the numbers that we saw after it sold off, that as well has got sold into a stock closer to around 9,000 odd.
And Nigel, absolutely, PSU Bank, the index recovery from the lows is almost 1.5%.
Yes.
The Nifty PSU Bank index is, I think, a performer, one of the few sectorally. And why not, right? I mean, PSU banks perhaps is the only pocket where we've seen steady earnings across the board, be it big, small. It's a very, very patchy record if you want to talk about private financials. Private banks, for that matter, MFIs, of course, bombed out this quarter. NBFCs, it was a kind of a patchy performance, but PSU banks have been largely, City Union, Karur Vysya, you want to talk about those, or the PSU banks. I mean, that's essentially the part of the market, the part of the financial space which is done quite well. I just want to take a quick look at a few other losers at this point in time and talk about what's happening. So PVR is down about 6% odd. It's the biggest volume-led loser right now across the board on the indices. So that is a big one. It's come off the lows. I mean, PVR low was about 1440 and the stock's now at about 1480 or so. It's about 40 rupees off the low. Look at Prudent, the mutual fund distributor. It's basically giving back almost all of what it gained in the last two sessions. So 2 sessions worth of gains being given back. just in today's session. The high today was 3,700 and has given up about 700-800 rupees from the day's high. That is prudent copy. It's got the second largest volumes overall. The other one is Polymed. Again, it's a story of give back, nothing more, because post numbers stock had gone up from about 2,500 all the way to about 3350, and from there it's coming back to about 2,950 this afternoon, and so on and so forth. Manappuram is, of course, Manappuram also attempted a bit of a recovery from the absolute lows recently. That was about 140. From 140-ish, it got to about 160, 165. It's come back to about 150 right now. So many of these names, Voltamp Transformers, from the absolute low of 10,000, basically 10,000 bucks, it saw a recovery close to about 12,000, and it's come down. It's given up 1,000 odd rupees from that point on. So that's the kind of market that we find ourselves in. We have Sanjay Parikh now joining us, founder and CIO at Soham Asset Managers. Sanjay, good to have you with us here. Good afternoon. Thanks for joining in. We're starting the show a little early because of the 1.5% cut, and good to see you here on the program. So, earnings, I think, are we can talk about all which is happening in the world, and a lot is and a lot will happen this week. But here, locally, earnings have been the problem.
Yes.
In your assessment, in your portfolio universe, Sanjay, what has the earnings season really meant? How many stocks have seen earnings downgrades? Where have you seen any upgrades at all? Go on.
Right. So, thank you, Prashant. So, essentially, yes, earnings season has not been great. While the previews came out, you did realize that this will be a quarter which will be having low growth. Maybe 3 to 4% was the initial expectation, but we may end up with even flattish or negative growth rate. Now, the key point is that, is it more of a one-quarter phenomenon or maybe one more quarter and then we revive, or it's going to be a secular longer-term phenomenon? So, globally, as you know, if there are secular downgrades, then certainly it's not well taken well by the FIIs. But as we see and as we went through our portfolio also, of course, we, right from autos, where we had an exposure, there were downgrades. And then financial was better. It was as per expectation. In fact, financials would look, banks in particular, look better when the whole result season is out. Capital goods is yet to come out for all the numbers. Pharma was broadly neutralish. IT was as expected, lower growth. I mean, a little bit of recovery that we saw. And then, cap goods, I told you, logistics is broadly going to be in line. So cement, of course, we had underweight, and it did help us because we got an underweight earlier. And I think still that will take a quarter or more. So overall earnings, this is an environment wherein you really need to even protect your capital. And of course, then look for appreciation. And, ours is a large cap fund with 73-74% large cap. And luckily, in the last month of fall, markets fell 6.1, we fell 4.1, 4.2. So it did get vindicated, and that's what exactly our positioning, that we would still feel that large cap would look better than mid cap. And mid cap, there is still selectively, there's still froth in certain segments of mid and small cap.
All right. Hi, Sanjay. Good afternoon and good to see you. And as always, what about you're sitting at around 8% cash? You plan on deploying it, or do you think a couple of big cues coming up? US election, Maharashtra election, what the Fed's going to do next, earnings disappointment. You rather sit on that cash, or will you start gradually deploying?
So Nigel, now what we'll do is, you will not get great bargains and great news. You will get good bargains when there is uncertainty. And here, within Nifty or larger caps also, now the good part is your shopping list is getting extended. So now is the time you'll enjoy to buy. You will have more choice. You have to be selective. And our strategy is in larger caps. Let's be into companies where reasonable valuations are there. You have fair certainty of earnings growth rate. And, as overall prospects look better. So you have choice now within Nifty as well. Even in our portfolio, we have 16 stocks in Nifty. So we don't own 34 stocks in Nifty, despite 73% large cap. And we do find that in the next 200-300 points of fall, it will give an opportunity and one should buy in and increase the allocation to equity. You can have some portion left out for if there's any panic, but we are clearly telling our clients that now accelerate your equity inflows, particularly towards the large cap mandates. And that's a very strong view that we have. But having said that, it's not going to be overnight shooting back because earnings will be downgraded. Our earnings this year will be maybe 1,060, 70. Next year on 25, 26 will be more like 1,200 now. So at 1,200, if we give 20 times, it's 24,000. But why we think positive is because all the balance sheets are still in very good shape. I mean, barring some microfinance or credit card issue, I think we've never seen all our balance sheets being so strong. And that is leading us to optimism that you need to preempt a little bit early and then start buying.
Okay, all right. Cut that out of the way. So you believe it's a good time to gradually start deploying, as you all have been indicated to your clients. Now, one theme that could play out in the second half of the year is the government spending could pick up. And they are seeing signs of that, particularly in the last 1 month or so. And you've been quite positive on the infra space. L&T's numbers actually were very good, and you all have some exposure out there. But not just that, even the second drug kind of companies, you all have good amount of exposure. Tell us about this theme. How positive are you from here on?
So Nigel, we are positive. So we saw, the order book being slow. And then first year CapEx spend of government itself is minus 4%. But clearly, we believe that government, for them to even in their agenda of revival in infra, they certainly will move up on spend, and that's going to be a priority. So we were always overweight there. Only thing is, what we have done is we bought them at reasonable valuation. So, Larsen and Toubro is a big overweight, which helped us. InterArc was a recent listing. It's really was a reasonable valued company, and we saw it almost 25% up in the last 2 months, and we still own it. We've reduced a bit, but otherwise we own it. And then we have, Solar Wilson, we still like, because it's a huge opportunity there. And then one company in infra space where we think it's a very deep value, which had survived the past cycle and can genuinely, create value in the next 2-3 years is the Bilcon. So this is where we are, and we believe that, we are well poised in that sector for earnings appreciation.
Got it. Sanjay, hi. Great to have you in with us this afternoon. I'm looking at the IT exposure that you have, and here also you're playing it via large cap names like an Infosys, and there's, I think, an HCL Tech that I can see over here. So what's the read-through and what is your expectation? Because the companies are still sort of talking about lackluster, mid-single digit to maybe, high single-digit growth. No one's talking more than that. Then there are global majors like Capgemini. It cut its guidance again, and there was so much of panic in the market on Thursday, right, last week. Yeah. So what are you baking in? Is this just a tactical move from a safety point of view to large cap IT? Or are you expecting sort of more growth ahead? And what will the US election mean? I mean, will it have a bearing, whether it's Trump or Harris? Could it have any impact on the fortunes for the larger IT players?
I think the last one I'll just take. I think genuinely this US election will be a non-issue for us. I mean, we'll have some coverage and most of it, but I think it's a non-event for us broadly, as I understand. On IT, we've been consistently underweight in the last 2.5 years since we started. It helped us for the first 2 years. In the last 3 months, we did cut our underweight. But in the last run that you saw 30-35% rise in certain stocks, it did hit us. But we realized that, and we did not, we cut our underweight, but we're still underweight there because they're great return ratios are very good, but growth rates are going to be 4 to 5 to 6%. And still we have uncertainty ahead, in terms of US spend, whether it will pick up or whether it will pick up this year or next year. And hence we were not comfortable at 25-30 times. So we were positioned with an underweight, but they do act as a defensive as well. So what we'll do is at a point of time, if we feel that the price is right, we will increase our exposure to IT. That's our stand right now.
Okay, Sanjay, I'm going to throw an open-ended question to you, right? You said you won't find certainty and a great price, so you'll have to kind of venture and wade into some uncertainty.
Yes.
So 2-3 names, just as and with clear disclosure, not an inducement to buy or anything of that sort. What's looking good right now?
So I'll tell you, let's take an example of Maruti, right? Maruti from the peak has reacted 15-18%, and we added. Let me be, that's a disclosure that now the next 2-3 months you could have, they have reduced their inventory base. The growth rate is 4%. That's all known, right? But can it prolong for next 1, 2, 3 years? I don't think so. The broad story of spend, consumer spend, disposable surplus remains. So here is where, there is not great news, but a great company with some weakness around the SUV positioning. But otherwise an impeccable, the way they manage it company in terms of cost, capital cost, efficiency is phenomenal. So few corrections of the new good launches, they are positioning an SUV getting better, and then you get a bargain, So this is where I think a lot of places, financials have now caught up to the underperformance it had. And in this fall, they've behaved quite well. But even still, I feel there is still, you get the best of the businesses. And we have all larger 4 names, Axis, ICICI, SBI, and HDFC Bank, all 6.5%, and 25%. And that, I think, again, is quite good. So we will now get a lot of ideas, I think. And that's where it excites us now, that in this fall, even if cement, while last quarter was weak, third quarter is again weak. But if the larger names were to get at 5-7% lower, we'll positively look at it.
I get your point, Sanjay.
Yes.
Yeah, I think hearing you, it's become very clear that you're happy that at least price points are coming to, good levels, lucrative levels. And then you just have to wait for the news flow to start turning around and pick the right company where the news flow turns positive the first, right? But I just want to go back to that point on autos, Maruti. And I thought that was really interesting because now almost 9% of your portfolio is geared towards autos. And the news flow is really negative, barring a Mahindra and Mahindra. It's all downbeat, and maybe some two-wheeler stocks. So just tell us a little more. Why did you pick a Maruti and not, say, a Hyundai, which you can also play now? And on two-wheelers as well, today's market is very interesting because Hero actually had good numbers, but the stock is getting sold off. Within auto, what are the other new additions beyond Maruti? And what are you really playing for here?
As you can see in the portfolio, Sansera is a holding that we own for 1 year. It's went up. Samvardhan Motherson is again 2.5 times. We still hold on. We've reduced our weight, but we'll keep this as a core holding. So those are, one of them is a global play, which could have some issues in the interim, but we genuinely like that on a secular basis for next 3-5 years. Now comes the Mahindra has been an existing holding for us. It's worked very, very well. You saw, their EV launch plan. Overall, they've gained market share. In a tough markets, they've done quite well. That is where we are. Maruti, I told you, we just increased as a contra bet. And Hero is one where it's not worked for us. We bought at higher levels. And it was reasonably valued, very well poised, moving up on in terms of the value chain. Getting into EV also, it has stake through Ether. It has an NBFC, and then moving up on the premium positioning. So they're doing all the right things. And we found them at a reasonable valuation, but recently it's been hammered and it's not worked for us. But we are very, very positive again on this name. So overall, I think for the valuation as a basket and for the pedigree of the companies that we own, we are very comfortable to own these companies.
Okay. All right. Good conversation and some very interesting ideas over there as well. Thanks for joining in, and we look forward to the next conversation. Thank you very much for being with us. So that's a view coming in on the market. The market, by the way, is still not doing too much, 374 points down. Basically, it's not looking as bad as it was at around 12 noon. One of the biggest events of the week, obviously, is going to be the outcome of the much-awaited US election, and we are in the final stretch now. Prashant's walked over to the wall to help us understand how the process actually happens. How does the United States actually elect its president? Prashant, over to you.
Thanks very much, Surabhi, for that. You can call it a toss-up, a dead heat, coin toss, too close to call, and many more adjectives, really, to describe the US election. But the fact is, it's right in front of us, and we'll have to react to it in the next 48 hours or so. Let's quickly take a look at how this really sort of happens, how the election process really works. First up, the question, right? As you said, how is the US president really elected? Well, eligible voters will elect the next US president, vice president, all 435 House seats, which is House of Representatives, and 34 out of the 100 Senate seats, and more. I'll get to that in just a bit. The next president, either former President Donald Trump or Vice President Kamala Harris, will be determined by what's called the Electoral College. 538 electors among 50 states and DC, where a majority of 270 or more votes is needed. So 538 is the total. 270 or more basically gets you the winner. Now, remember, the electoral vote is awarded on the basis of the popular vote in each state. And this can differ from the overall national popular vote. Basically, each state has a certain number of electoral votes. And depending on who wins a particular state, all the electoral votes which that state has goes to the winning candidate. So in that sense, it's like a winner-takes-all situation. This is true for 48 out of the 50 states. In 2 states, that is Maine and Nebraska, they follow a system of proportional sort of representation. So basically, the way the US election system is set up means that a candidate could win the overall national popular vote, but still lose the Electoral College and hence the election. Okay, now let's talk about the lay of the land. Now, historically, we know that some US states like California have always voted for Democrats and some have always voted for Republicans. Assuming this stays the same in this election as well, Republicans can count on 219 what I'm calling safe electoral votes, and the Democrats can count on 226 electoral votes. So this is the starting point, assuming that the Republican states, the red states vote red and the blue states vote blue. Now, as we sort of outlined earlier, 270 is the winning number. 270 or more is the winning number. So Republicans need 51 more and Democrats need 44 more to reach the 270 total electoral vote math. Now, because of this safe seats for both Republicans and Democrats, which we assume will vote the same way, the swing states come into play. And these are states where voters are undecided and have kind of swung between voting for Republican candidates and Democrats in previous elections. There are 7 such swing states which are in focus, with Pennsylvania being the most important because it's got the largest number of electoral votes. The other 6 swing states are Michigan, Arizona, Nevada, North Carolina, Georgia, and Wisconsin. This is also, mind you, the closest election in a really long time. Trump, this could change, but he's leading the national polls by just 0.3 points and is either tied or very marginally ahead across all major swing states. The last 2 elections were also very close. For example, in 2020, just 43,000 votes across 3 states. That is 0.02% of the total national vote determined the winner. And if you go back to 2016, it was 77,000 votes, 0.05% of the national vote, which determined the winner. Could this be sort of close or closer? We'll find out. Lastly, we come to the question, when will we know the results? And a lot of debate around this. Remember, the AP, Associated Press, which is traditionally called the US election, back in 2020 did not call the election until Saturday, November 7th, 4 days after the election day. With this election also being very close, could we see a repeat? Sure, we could. But do remember that a delayed official result does not prevent, and I think will not prevent, financial markets, which will be trading, from reflecting the likely election outcome on the election night in the US, Tuesday night, or early morning, which is Wednesday morning, when we'll be trading as well. So let's get to specifics in terms of by what time, and I've converted those sort of timings to our time. So by Wednesday morning, 6:30 a.m. our time, majority of polling stations in the US should close. News organizations cannot make official projections, their own projections about the polls until polls close, prior presidential elections have been called by about 9:50 a.m. our time on Wednesday. Of course, there are exceptions, as I said earlier. These include the year 2000, 2016 and 2020, where for year 2000 and 2016, the Electoral College winner was not the popular vote winner. So I guess be prepared for an exciting Tuesday night if you plan to follow US elections, if you plan to stay up and sort of, munch on popcorn as you watch it, or if you plan to get to work Wednesday morning extra early or get up extra early and catch all our programming on the US election verdict and the market implications thereon. Back to you guys.
Thank you so much, Prashant. You took the words out of my mouth with that kind of a primer. I'm so ready. It should be like large cups of coffee, if not popcorn and some cookies. And this Wednesday morning is going to be definitely a very exciting session of Bazaar. All of us, of course, are going to be here and we'll take you through the blow-by-blow outcome as it unravels. Well, we'll take a quick break on that note, come back with more on the markets in just a bit. We'll have Dipan Mehta of Elixir Equities join in.
Your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? Watch CNBC TV18 for the best newsmakers and the sharpest analysis.
We bring you all the action live right here on CNBC TV18.
Welcome back. We've seen a bit of a recovery. 100 points off the low point of the day. The PSU banking names, they are fighting back, so that's good news. SBI has seen a good fight back. IndusInd Bank has been one of those stocks in the last 1 year that's been a big underperformer in comparison to what the Nifty has done. That as well has come off the low point of the day, so that's good to see. And I think ICICI Bank as well, it's cutting its losses a little bit. So that's good to see. At least the number of stocks advancing has moved up from around 300 stocks at the low point of the day to you have around 500 stocks that are advancing. So that's why your portfolio will be feeling a little bit better. Let's get in Deepan Mehta, though, who joins us on the show. Hi, Deepan. Good afternoon. And it's that sort of an afternoon, right, where either you participate, look to buy some stocks, or you say it's looking too hazy. Let's stay aside, let a couple of these days pass out, and then you come back and, buy what you want. But the stock I want to ask you about is Bajaj Auto. One of those big outperformers. Management did the right thing. They did a buyback. Business started firing as well. They're gaining market share, not just in the normal ICE vehicles, also in the EV part of the business. But post their numbers, the stock has become nervous. And after today's monthly update, it's even more nervous. What do you make of the management said? They're saying they're reporting wholesale numbers, but the retail sales actually are quite positive. The street has not bought into it, though. Your view?
Yeah, Nigel, good afternoon, and thank you for having me on your show. So yeah, this is one of those afternoons, but we are just staying away for the time being. And specifically on Bajaj Auto, I think that you need to wait for better monthly numbers to come through. A bit disappointed on the export front as well, because that's like a big saving grace when domestic markets turns off Bajaj Auto. But other companies have reported impressive numbers. So I just want to wait and watch and see who the winner emerges from the two-wheeler space. I thought TVS and Eicher also certainly may offer a better risk-return profile as compared to Bajaj Auto. But all of them are more or less on the same level. And I think returns also over a medium term will kind of be within a particular band. I don't see any one company really outperforming or one company really underperforming big time going forward.
I was looking at numbers from VST Tillers. No great shakes here either. The revenues kind of flat, just 1.5% up. Profitability is under pressure. Margins are also slightly lower. And stock's not doing anything. So yeah, it's been fairly volatile and largely lackluster for the auto pack. Deepan, hi, good afternoon. So have you been shopping around? There's a Diwali sale or post-Diwali sale, it seems, going on in the market now. 10% gone from the index, or not 10, 8.5% gone from the index, a lot more in individual stock names in the last 1 month. Have you been buying or are you still waiting?
Good afternoon, Surbi. Just still waiting. I think valuations certainly have come off. They are back to perhaps where they were in the first quarter or beginning of the year, because earnings also have gone up for a lot of good quality businesses. But still, I think valuations are on the expensive side. We're certainly not in bargain zone as of now for a whole host of good quality businesses. So just wait and watch. I think that in this particular phase of the market, this correction, the investors, especially retail investors' conviction will be tested. And that will immediately reflect itself in mutual fund inflows. So if they remain strong, then you may have a short-lived kind of a correction. But if you see flagging of the numbers as far as SIPs and net mutual fund inflows are concerned, then certainly we're in for a long winter, so to speak. So I think right now it's better to just wait and watch and see how this market plays out. It's a very critical phase of this bull market, which we have seen for the last 4 years or so. And it could be a turning point as well. So I would just like to, sit on cash for the time being, and maybe pick and choose only where we see a deep correction and a good amount of value coming back to good quality growth stocks.
Deepan, afternoon. I wanted your thoughts on one particular name, Credit Access. Now, most people will balk at the idea because, MFI and results, etc. But a few things going for it. It's first of all, it's halved from its highs, right? Late December 23 is when it made a high about 1850. It's basically half from there. Valuations relative to its own trading history substantially below. And within MFI, which is a tricky space, it is, you would agree, and most investors would agree, it's the best, highest quality name. So just your thoughts, if you've thought about this at all.
Yeah, Prashant, good afternoon. I've been thinking about it a lot. It's one of the stocks in our portfolio. and we are feeling the pain as with most other investors in the company. But I've been observing this MFI space for many years, and I was an early investor in Bharat Financial, which got merged with IndusInd also. So this is a very, very volatile space, and 2-3 years go really good, and then 1 or 2 years there are huge setbacks. But end of the day, the long-term fundamentals of the sector are great because it's underbanked, it's a segment which requires credit and which deserves credit also. It's just that from time to time, these collection problems come through. So companies which have got a good track record during previous times when there was a stress in the sector, like credit access, those certainly should be preferred. And truly, it's a growth segment within the entire NBFC banking space. So I'm not throwing in my towel as far as MFIs are concerned. And being long-term investors, if you can take a 50% correction in the stock, then this sector can do really well when the actual, sector turns around. And RBI also is very vigilant over there, and they are trying to implement a lot of steps whereby the growth and the collection of the entire segment within the NBFC also improves. So I think that if you have a really long-term view, 3 years, 5 years or so, then this is a great time to get into some of the quality MFIs. And I totally agree with you, amongst the entire, eco space of MFIs, credit access by far is the best when it comes to collection, as well as when it comes to diversity of their geographical diversity of their AUM.
Okay, do you fantastic and good to good to hear those views on credit access, Deepan. Just one more sector, transformers. I was reading this report in the Financial Times where they interviewed the Hitachi Energy Global Management, and they were talking about the big shortage that they still see. I mean, it's there and it's here to stay for transformers. I don't know if you own any of the stocks. Stocks have done phenomenally well last 2 years. They've doubled, tripled in some cases.
That's right. We don't own any of these stocks. But end of the day, I think this electrical equipment companies have done really well. This kind of renewable power and more sources are away from traditional areas where consumption is taking place. So therefore, the demand for transmission equipment has certainly increased. But look at the valuation, whether it's a Voltamp or a CG Electric. And then there are some parts, some parts of the transmission business which are done by ABB and Siemens as well. But all of these companies are really expensive. And, base effect also going to catch up for these companies. So I'd just, wait and watch. The better way to play the electrical equipment business would be through the transmission companies like, say, Kalpataru or even a KEC International, which have a more global operation as well. And I think valuation is a little bit more reasonable over there.
KEC, I think numbers are also expected today. Let's see how the company fares in the second quarter. All right, Deepan, we will let you go on that note. Thank you very much for joining in and giving us perspective on what's turned out to be a bit of a tough Monday for the bulls. The saving grace is, like we've been saying, is that the market has recovered from the lowest point of the day. It's a good 120, 130 point recovery now. Slight leg up as we can see over there. Need to take a quick break, I think. And as we take this break, let's get you a programming reminder as well. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year. The CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted, so you don't want to miss this. Welcome back. So we are just about 15 minutes away from 3 o'clock. The market stabilized. That's good news for the bulls. For the time being, we have Mitesh joining in for some trading calls. Mitesh, it's been quite the day. But I don't know, are you feeling confident enough to now go buy in, buy the dip? What's the strategy? Index as well as, of course, individual stocks.
So, good afternoon. I think, we talked about the fact that in case you break 24,170, we'll add on to the short side positions. We've done that. And while there is some recovery, about 130, 140 points from the lows, the structure hasn't improved as yet. And my belief is that there's a good chance of us testing the 200 average area on the Nifty. There's also a gap area around that level, which comes in at about 23,560 odd levels. So I think and the 200 average is at 23,450 and is rising by a few points every day. So I think the 23,500, 600 zone could be tested. That's where I would want to take profits on the short position. So for the time being, I think, we're maintaining a negative bias. And we'll just suggest people who have short positions to trail their stop loss. Now, I think 24,050 on the spot, about 100 points higher from here could be a good level to trail your stop losses.
Okay, got it. So you continued with the negative bias. Mitesh, what about individual stocks?
So, good afternoon, Ajil. I think I have one buy and one sell given the fact that, we have a lot of index short positions. So identifying some stocks where longs can be taken. And that is the way, approaching the markets. A long buy on Motherson with a stop at about 180 for targets of 191 can be looked at. While L&T Finance, I think, that's something which I would recommend selling. Keep a stop at about 146.5, look for targets of 137.
Okay, all right. Thanks a lot for that, Mitesh. We'll come back to you for a fresh call in the next few minutes or so. By the way, what's helping the fight back? It's actually tech. Tech's done quite well. You pull up the intraday chart of the tech index and maybe you pull up stocks like Infosys, TCS. I think HCL Tech and Tech Mahindra, both of them, they moved to the high point of the day. So the index itself has cut its losses, and some of these stocks, they've now moved to the high point of the day. TCS as well as cut its losses. The other two names that I mentioned, pull up Tech Mahindra, that got, I think, a harder knock last week. That's holding with a gain of close to around 2%. So Tech is clearly fighting back. The problem is the auto stocks. They have seen a sharp fall, despite some of them reporting a better than expected performance in the past month. Bajaj Auto as well is under pressure post the numbers that it reported. Sudarshan joins us to help us out with a quick analysis on all of those stocks. Sudarshan, take it away.
As you said, it's been a surprising move that we have seen in some of the stocks after their monthly sales. Stocks like Hero, TVS and Eicher have fallen sharply. Despite these companies reporting sales that looked much better than estimates and even saw a healthy growth year on year. For the month of October, overall domestic wholesale volumes for two-wheeler industry were up 17% and for passenger vehicles, growth was at 2%. And retail growth for festive season 2 has been better than expectations. Two-wheelers saw a growth of 12% and growth for passenger vehicles was in the range of 8 to 9%. So let's start with the company which reported an all-round beat, and its top Nifty gainer today is M&M. Both auto and tractor segments for M&M have done well. Auto segment was led by SUVs, which saw a growth of more than 20%. And for tractor segment, good monsoon has helped the company to report a healthy growth. For Maruti, total sales were in line, supported by exports. But for Maruti, the concern is entry-level segment, for which it saw growth has declined. Basically, it reported a decline year-on-year of 20%. For Tata Motors, sales were almost in line to a slightly higher than muted expectations. It reported sales that were unchanged year-on-year versus our expectations of a decline. And even for US retail sales for JLR, company has reported a growth of 20%. For TVS, again, sales were in line with estimates. Motorcycle sales have increased 14%. Scooter sales were up 17% year-on-year. For Eicher Motors, company has reported highest ever monthly sales for Royal Enfield. It reported sales of 1.10 lakh units, registering a growth of almost 31% year-on-year. For Hero Moto, again, company has reported highest ever monthly sales led by 100cc and 125cc segment, and total sales were up 18%. at 6.79 lakh units. Also, just a few minutes ago, company has reported disclosed retail sales for festive season. It says company has recorded highest ever festive sales with growth coming at 13%. For Bajaj Auto, amongst all the two-wheelers, it has underperformed and it has reported sales that were much below estimates. And concerns for Bajaj Auto are domestic segment, while exports have done much better. Total sales for exports have come in around 1.75 lakh units. Ashok Leyland sales were below estimates, except bus segment. All the segments of Ashok Leyland have seen a dip and total sales were down 9% year. So it's not all bad for the month of October. Overall sales and festive season growth have been looking much better than the commentary from few companies that we had received in midway of the festive season.
Okay, all right, got that, Sudarshan. Yes, it's some good, but then a lot of segments, like you're saying, commercial vehicles in particular, they continue to reel under pressure. Entry-level cars, commercial vehicles, no improvement whatsoever. Well, let's discuss this and a lot more with our next guest. Gurmeet Chadha of Complete Circle is with us on the show now. Gurmeet, festive greetings. Hope you had a splendid Diwali and good wishes for the new Samvat as well. So let's start actually right there. Like, autos, now a lot of these stocks are off anywhere between 10% in the case of an M&M, going up all the way to 24-25% with some of the two-wheeler names or even Tata Motors. The question is, should you be buying anything, expecting a recovery, say, in the next 2-3 quarters?
Subi, Diwali greetings to everyone. So I was traveling to MP, my hometown. I think the rural recovery to me is early signs. I think there are some green shoots available. This was a much better Dhanteras and Diwali as per the ground feedback we got, and we are into similar business. So I would be probably trying to play the rural recovery over the next few months. May not be immediately. I think the price adjustment because of earnings and number disappointment, I think maybe 70-80% has played out. Also, the auto stocks had run up a lot. The auto index was up to 30-40%. A lot of these stocks were trading at 35-40 times. So some bit of a pullback on numbers not being as good is normal. In fact, the market is not differentiating. If you see, M&M is actually up today 2.5% after reporting a great set for October. Even the tractor numbers were up 30%. Similarly, the markets have not been very kind to likes of Tata Motors and others, because Tata Motors domestic as well as the global numbers of JLR due to aluminium and other stuff and China numbers have been a little soft. So I think from here on, market will differentiate. I think the price adjustment because of soft earnings and soft numbers to a large extent, in my view, has played out in auto. Here on, it will be a question of who does better. And that's why you got to be selective. So on two-wheelers, we are trying to add Sandhar, which has 60% exposure to two-wheelers. We are trying to add some more names in two-wheeler names. We have a Sundaram Clayton in the portfolio, which has done very well for us. And then we are trying to add some OEMs where there has been a good correction. Likes of M&M, likes of Tata Motors now, starting now, around 800 odd level. So we are trying to gradually build this. I don't think so we are in a structural downturn. It's a bit of a softening of numbers, bit of a base impact. I think things should come back.
Absolutely. And coming back to you, Gurmeet, on that for more. But let's talk about Indigo as well, which is in focus ahead of launching its first flight with business class seats. Madhya, who of course tracks aviation very closely, is with us. It's a significant milestone event for Madhya, isn't it?
Definitely. 14th November is set to be a historic day for Indigo. It will debut the business class product on 6 daily flights on the highly popular Delhi-Mumbai route. The 3 flights from Delhi to Mumbai will be at 7 a.m., 1 p.m. and 7 p.m., while the flights from Mumbai to Delhi will be at 10 a.m., 4 p.m. and 10:15 p.m. Now, each of these flights will feature 12 business class seats, so that makes it 72 business class seats across the 6 flights on the Delhi-Mumbai route every day. Now, Indigo has set a flat fare of 18,000 rupees for all these business class seats as compared to a higher fare or other carriers like Air India and Vistara. Looking ahead, Indigo says all flights on the Delhi-Mumbai route are expected to feature a business class cabin by early January. Then by March 2025, business class will be available on all flights from Delhi to Bengaluru and Chennai. And in the next 14 months, Indigo aims to induct a total of 45 aircraft that will be equipped with business class seating. These planes will cater to 12 routes, so 268 Indigo flights are expected to have business class offering in the next 14 months.
All right, Vamakshi, thank you very much for that. So 14 November, business class seats as far as Indigo is concerned, and flat fare 18,000 rupees, 18,000 and change to start with at least. So that's the price on your screen, 3966 on Indigo. Gurmeet, I don't know if you own Indigo, Interglobe in your portfolio. Any thoughts? You heard Madhya?
No, I think I was a bit surprised by the quarterly numbers. The EBITDA numbers were down 26%. Some of it was, the fuel impact. Also, there are about 60 planes are grounded due to the P&W maintenance issue. And they've guided that this number will come down to 40 next year. But in terms of, if you see the passenger load factor, it's almost 80 to 83%, which is amongst the best. I think efficiency-wise, they're right up there. Like globally, they're right up there. Even if you look at revenue per passenger kilometer, which is one metric, that's also around 31 odd plus billion, which again I think is best. And they're starting 2 more international routes this year. Then there is this business class, and I think travel as a consumption in terms of wallet share and consumption basket is only going to go up. We have a very heavy wedding season ahead. Almost 40 lakh weddings more due for the remaining part of the season. And even the business outlook seems pretty okay. So I would probably be positive, and fact that the Gangwal issue in terms of large part of the selling in terms of supply pressure is behind you. And if you see the domestic fare tracker, which airlines publish and that's available in public domain, that's also up 12-14% on the domestic route. So I think it's a good price point to probably start nibbling into it and gradually accumulating.
Okay, that's Interglobe Aviation. So, Gurmeet, I've been asking most of our guests to give a pick, right? Because there is this, discount season of stocks that's underway, which is rare in our market. Deepan earlier, he came before you. He said he's still waiting and watching, not rushing to buy. And what about you? Any name? Maybe you won't buy today or tomorrow, but something that you're quite convinced on, and this is sort of a medium-term portfolio call that I'm asking for.
So, Subi, one question you have to ask yourself: is this slowdown in India structural or a bit of a softening after a good growth period? Second, will US elections or rising bond yields or China's stimulus matter after a couple of months or not? Nobody can predict the bottom, but you got to get into something, because with markets is once the levels keep falling, you may have cash, but the courage disappears, right? So you have to keep gradually doing it and can't perfectly time it. So we are trying to add, as I said, more financials. One theme which I like, which I've been talking with you, is this entire recycling thing. I think we have done a lot of harm to Mother Nature, Earth, and I think look at the water pollution, look at the air pollution in Delhi, and most metros for that matter. So we are extremely positive on water as a theme, water recycling, water desalination. So we like VA Tech in this space. We are very positive on plastic recycling. Ganesha has been one of our top picks for a while. It's really rewarded us well. I think, and there's a fine now government has put in. It's almost 25 rupees a kg for every non-compliance. So, something like a Coke, Pepsi, etc. They produce 600 crore PET bottles. So the opportunity size is pretty big here. So we like this theme, and that's what we are very, very gung-ho on in terms of picking. Rest, we are adding some banks and some autos and some capital goods and defense themes on whips.
Okay, all right. Gurmeet, PVR is the other one which we want to just highlight for our viewers. It's down sharply, and it's actually going down on pretty large volumes. This despite reportedly both Diwali releases, which is Singham and Bhool Bhulaiya 3, doing pretty well. Vamakshi is here with details of not what the stock is doing, because the stock is down, but the box office collections. Vamakshi, take it away.
Well, absolutely. PVR Inox, in fact, the stock is down in trade. It's seen the biggest intraday fall since December 2021. In fact, among the top losers on the Nifty 500 index as well. But there is nothing substantial to justify this fall, and that is because the company has been seeing good box office collections. Both Singham as well as Bhool Bhulaiya 3 have done well. both of these movies have crossed the 100 crore mark in the opening weekend, and despite the head-to-head, clash. And this is quite rare. Singham again managed to garner net box office collections of 121 crores, while the same figure for Bhool Bhulaiyaa 3 stood at 106 crores. There were some other notable releases as well. Let's look at how they performed. Amaran managed to garner nearly 84 crores, Lucky Bhaskar 29 crores, and Venom The Last Dance managed to get almost 47 crores in net box office collections. For PVR Inox, this in turn translates to good box office collections. For Singham again, Nuvama estimates that the box office collections over the last 3 days for PVR Inox alone could be somewhere around 41 crores, while for Bhool Bhulaiyaa 3 it could be somewhere around 35 crores. Even the occupancy seems to have picked up. Bhool Bhulaiyaa 3 saw an occupancy of almost 73%, while Singham again saw an occupancy of almost 54%. Not just that, there are several other big ticket releases lined up. From the domestic market, we have Dhadak 2 as well as Pushpa 2 The Rule, which is releasing in November and December respectively. But even Hollywood movies are making a comeback in a big way. We have Moana 2, Lord of the Rings, as well as Mufasa the Lion King, that is scheduled in November as well as December. In fact, when the management had joined us earlier, they had alluded to the fact that quarter 3 could be substantially better than quarter 2 in terms of average ticket prices, the spends, etc. And in fact, they also highlighted that in fact quarter 3 of this year could be as good as quarter 2 of last year, which was one of the best quarters for the company in its history. Novama, there's a take coming in from there as well. They say that they are concerned over urban consumption slowdown, but they're expecting both of these movies, Bhool Bhulaiyaa 3 as well as Singham again, to pick up over the weekend. In fact, in a note that the company had posted earlier on September 23rd, Novama said that they anticipate the company to achieve the highest ever monthly admissions as well as box office in November as well as December. So overall, it's been good for PVR Inox, but unfortunately the stock is tanking in trade.
I guess. And today, in any case, it's in the midst of overall wider market sell-off, so that could have a role to play in it as well. Vamakshi, thanks for, however, highlighting that some of those movies have done really well, and maybe with the Diwali festivities behind us, maybe the collections pick up in the coming weekend as well. We do have to take a very quick break. On that note, we will come back on the other side. We'll have Tushar Pradhan, director at Hexagon Partners, joining in with some perspective on the market.
Okay, welcome back. You got the market, which is down about 320 points, which means that we're off the day's lows. I think we're off the last 1 hour lows as well. There's a slight lift, as you can see, coming through on the indices. There are some flashes from Reuters which are coming through. The Reliance Jio IPO is likely in 2025. Reliance Retail sort of IPO is much later. This is according to sources to Reuters. That's the information which is coming in. I mean, the Jio IPO is indeed widely expected by the market in 2025. And I think the story just kind of sort of corroborates that. But this is a story, once again, from Reuters, which is coming through. Stock's not really reacting very much at all. I think from the lows, it's picked up, but not after this news. The low was made early on at about 11:10 this morning. That is on Reliance. 1287 was the low. Stock's at about 1307. Tushar Pradhan is with us, director at Hexagon Partners. Tushar, good to have you with us here. Thanks for your time. Good to have you here. Quick word, Tushar, on markets which are selling off. Another 300 points, just under 24,000. How much more in your opinion? I think you'll have to unmute yourself, Tushar.
Sorry. That question is an amazing one because if I knew the answer, it would have made me very rich. So there is really no way to predict.
Not necessarily, Tushar. You can have all the answers, but making money is. But anyway, I mean, because are we in the? So earnings certainly are coming off a little bit. You'd agree, but as it often happens when you're going through a market correction, you always wonder, right? I mean, is this a slightly bigger one? Have the markets on the upside overdone it? Those are natural questions to ponder. So just wanted your thoughts there.
Yeah, nice to make that context a little bit wider because I think we need to answer that in a wider context. The biggest happening which is going to come upon us is, of course, the US elections. Now, you would argue that what has Indian markets got to do with it? But I think we are all interrelated here. And I think this is a major one, at least from a news perspective. 2-3 things really come to mind because of that is that the US markets are likely to react in very different ways to either of the candidates coming to power. Now that leads to a lot of uncertainty. And I think that uncertainty is something which is playing into the markets right now, even our markets, because people are unwilling to take a bet because of the direction in which markets are likely to go after the verdict is out. Because as we know that both of these candidates have very distinctive economic agenda. And that will lead to a different set of outcomes for most of the companies that we trade in. And as a result, globally, that will have a big impact on earnings per se, as well as where the economy in the US goes and then eventually the global economy. So I think that's a big overhang that I think our markets may be just feeling a little tense about. If you look at the fundamentals, and as you mentioned, earnings have been a little soft. I won't think it has been a little soft. I think it's been a little bit less than expected given where the market valuations are. So we've seen companies which have been delivering in line with what their expectations are, yet they underperform. And I think this is something to do with the market sentiment rather than the fundamentals alone. So I think from an India perspective, the earnings situation continues to remain very strong. We just ran a couple of screens and we find it very difficult to find any company which has had a significant drop in quarterly earnings in the last 2 or 3 quarters. So it does show you that there has been tremendous earnings momentum. And this kind of momentum doesn't come to a halt suddenly. So I think there are 2 issues to concern us. One is what will be the sentiment going forward and where are the fundamentals? And I think if the sentiment worsens, then even if you have good fundamentals, it doesn't hold up too much. So it's more to do with the near term rather than any lasting impact, I think. That's the view I have now.
Hi, Tushar. Good afternoon. Good to see you. And so what would your strategy be then? We have big events. The markets have run up considerably. Earnings misses could be relatively less. But at these valuations, they count, right? And they hurt. So what would your asset allocation strategy be?
Well, if it is purely equities, then of course, we don't have any option to leave equities as an asset class. But overall, if you were to look at an institutional portfolio and say, look, I want to position, a portfolio which is largely liquid and designed for relative performance over the next 1 or 2 years, I think the asset allocation could definitely look at a little bit of debt, because I think the uncertainty and the volatility is not going to go away in the next few quarters at least. And as a result of which the overvaluation could lead to some sort of profit taking and a sort of stowing away, I would think, some of the gains into fixed income for a while. But I'm not suggesting a switch out of the asset class. I'm just saying that at the margin, I think there could be a reason to kind of revisit the allocation there. From an equity alone perspective, I think that is really where the rubber hits the road, and we now need to distinguish between companies which have run up on the basis of sentiment or popularity, or I would think, the sector having done well and everybody benefiting out of that, as opposed to companies bottom up who actually will be able to deliver their promise. And I think there is a very, very hard look that needs to be taken in terms of which companies will deliver on the promise on the fundamental side, and which ones are likely to, kind of fall away if the sentiment remains pretty negative sometime. So I think the review in equity portfolios have to be done really from a bottom-up perspective and to kind of reassess the risk that anyone has taken. Of course, the fact is many equity portfolios also contain a speculative element. They also contain a sort of, I would say, defensive element. And I think this is the time to improve the defensive element in any portfolio.
Okay, all right, Tushar, appreciate you stopping by. A short but sweet conversation today. We look forward to chatting with you in the coming weeks as well. Well, the markets have recovered, from around 300 advancing stocks. You had close to 500 at the start of the show, and now that number's moved to 550. So the breadth of the market, at least, there is some kind of improvement what we're seeing out there. Two sectors that are pulled back considerably. One is the PSU banking names, and the second one is the tech space that's seen a good bounce from the low point of the day. Nimesh joins us to help us out with what he's picking up in D-Street Chatter. Nimesh?
Hi, Nigel. Today's fall is a bit of a surprise. Actually, it was not anticipated, or there was no indication of that kind of a selling as well. So, again, the feedback is while the stock markets have recovered from the intraday lows, barring few banks and few large cap names where there is one particular FII who's looking to unwind the book, most of the other desks didn't have such a large sell flow. In fact, it's either positive or neutral as far as flows are concerned from the larger FIIs. So, well, the Nifty, the fall looks quite sharp. My sense is not backed by very large FI selling, barring that one long only fund which has been a seller. In terms of sectors, clearly banks stand out in terms of selling pressure, and technology is the other sector where there is selling pressure from larger FIs. On the other side, metal is well bid. I guess a bit of pre-positioning before the China stimulus package. So that's something which is well bid. Technically, the feedback is that while the markets have recovered from the lows, 24,070 on a closing basis will be very, very crucial for any sort of a meaningful pullback or a short covering rally. Net, while the Nifty is down, the broader markets are down. Looks like it's more of local unwinding and just one large FI unwinding, but the otherwise flows are not very large from larger institutions.
Okay, all right. What about individual stocks, Ramesh? What are you picking up?
So, Nigel, in terms of individual stocks, the first stock is Torrent Pharma. The stock was under pressure last week when the promoter sold 3% stake. But because of that promoter selling stake, there is a FTSE rebalancing adjustment in today's trade. So, last 30 minutes, you're going to see an inflow of close to $14 million because of the weight going up in FTSE. So, that's the first stock. That is Torrent Pharma. The second stock is CAMS. The stock has been a big outperformer in the last many days, and that's backed by FI buying. That continues, even in today's trade, the sense is there is aggressive buying from larger FIs in CAMS. The third stock is IIFL Securities, again a proxy market play. The stock is under pressure today, but the sense is after a long time, some bit of institutional interest seems to be back in IIFL Securities. Expect high delivery volumes, and there is buying interest from larger FIs in that particular name. And the last is Manappuram Finance. For second day running, that stock is under pressure. We saw a big move last week, but after the Ashirwad numbers, the stock was under pressure. And for second day running, there is delivery-based selling happening in Manappuram Finance. So it looks like some larger FI seems to be selling out of Manappuram at these levels.
All right, Nimesh, thank you very much for that. So that's individual names in focus. We'll take a break. We are going to come back get you short-term trading ideas on the other side with our technical experts. Stay with us.
Welcome back. So the bulls have really been fighting back hard, and 24,000 is back on the screen, and you have to give it to them that they didn't throw in the towel entirely, and there's been some recovery. We have Mitesh back. Mitesh, earlier you were telling us that this is still not looking very convincing, and you had gone short, I think, earlier. Are you still running with those shorts on the index, or looking at this recovery, would you be inclined to closing them?
So we haven't closed the shorts. As I recommended trailing the stop to about 24,050 odd level. There's still about 50 odd point left on the trailing stop loss to be taken out. The structure still remains weak. We have definitely bounced back nicely from the lows, but the overall close is still on the negative side. The indicator setup is on the negative side. The only thing is that the markets are slightly now showing oversold readings on the indicators. And therefore, trading stop losses would be a good idea because you don't know whether it will rebound from here, take your stop loss, or it will continue to fall in an oversold situation. So I think that's the way to approach it. And on the stock side, I have one buy and one sell. TVS Motors is an STBT with a stop at about 24.26 and a target of 23.70 on the downside. Possibly can be looked at. While on the long side, I would recommend BTST on Reliance, which is extremely oversold and hitting some historical pivot levels. So Reliance is a VTST with a stop at about 1289 and a target of around 1320.
Okay, all right, Mitesh, thanks a lot for that. Well, the MSCI November review will be announced on November 6th. Vivek joins us with the key expectations. Vivek?
Well, that's right. Remember last year it was on November 14th. This time around, it's slightly earlier than what the street was anticipating. So November 6th is when MSCI will be going ahead and announcing the review and the list of changes, list of inclusions as well as exclusions as far as the MSCI index review is concerned. For interviewers, it will be on early 7th morning. Now there are quite a few inclusion candidates that may make the cut this time around. As per IIFL, we have almost 6 candidates that may make the cut this time around for inclusion into the MSCI Standard Index, the index that we track where there will be maximum amount of impact. The first stock on the radar will be Alchem Labs, expecting flows of close to $200 million. The next stock, stock that may qualify for cutoff, depending on when the cutoff date is, and that is Voltas. Voltas may see inflows of a little over $300 million if in case it does make the cut. Oberoi Realty, Adani Energy Solutions, Kalyan Jewellers most likely have already made the cut. So safely, that's another 4 stocks that you can look at that have made the cut. And lastly, Bombay Stock Exchange, similar to Voltas, this stock too may have made the cut this time around. It can expect to see inflows of a little over $220 million. Another important stock that will be on the radar is HDFC Bank. Remember, in the previous quarterly index rebal, you saw one tranche of weight up. This time around, there's another tranche of weight expected. $1.8 billion of inflows is what IIFL is anticipating into HDFC Bank this time around.
All right, interesting one, Vivek. Thank you very much for that. There's about 9 minutes to go for market close. We're going to take another quick commercial break here, but there's more lined up on the other side. Stay with us.
Welcome back. We've staged a bit of a recovery from the low point of the day, 150 points off the day's low. The Nifty Bank as well has pulled back more than 250 points. Rahul Sharma is with us of JM Financial Services. Hi, Rahul. Good to speak to you after a while. How are you viewing this kind of a pullback that you're seeing? Do you think we're headed to the 200 DMA, which is 600-700 points away from current levels? Or do you believe that from here on, we could see a bounce up?
Yeah, so, Nifty, the way we've seen the sell-off today, one thing is clear that, 23,800 remains like a crucial make or break area for the Nifty. We almost went over there and broke that support, but apparently, market had other plans. Now, as long as 23,800 is intact, we have a conviction that the bounce back can be expected in the Nifty, where we could retest the 24,500 area. But having said that, markets are still on a slippery ground. We have a multitude of events lined up in this week, so volatility is going to be at the forefront. The best thing to do is do the strangle approach, buy OTM call options and put options at the same time, and play this week out, post which we are expecting volatility to settle and a clearer trend to emerge in the markets.
How about that strategy of the strangle? Which strikes would you recommend? Buying out of the money call as well as the put side and the combined premium on
yes. You could look at the 24,200 call options, which are currently trading at 107, the 7th November expiry, and the 23,800 put options, which are trading around the 113 mark. So the combined premium is approximately 220 rupees. We expect this premium to do well. One is the VIX is expected to go up as the event unfolds, the US elections. Plus, we have so many updates coming in globally. And secondly, a 300, 400 point kind of a move on either side could mean that this strangle becomes profitable. So strangle is the way to go. 23,800 and 24,200 put call options can be considered for this strategy.
Okay, Rahul, so those are some index calls. Tell us about any individual pockets of the market, because I think the problem that investors are facing after a long time is usually in all the prior falls, you immediately knew where the momentum was and where to go and buy the dip. And now there's no clarity on that. So it's not like straight jacket, you go buy defense again or railways again and the stocks will start running. Just some guidance on this front. Would you be looking to buy, say, banks in the fall or anything else?
Yeah, so in this correction, there has not been a single hiding space. Basically the correction or the sell-off has been broad-based, which is the reason why, we are not seeing even the defensives one sort of, provide support to the market. But having said that, some green shoots are visible on the PSU banking space. The PSU bank index looks pretty decent technically at current levels. We are seeing leadership coming in SBI. We are seeing a good setup being formed in Bank of Baroda. These are the two names which could do well on the upside, but Bank Nifty itself on the back of private banking names is not really in the best of shape. So it again remains a tricky trade, but best thing to do in such volatile periods is keep the position sizing small and stick to sector leaders. Now these sector leaders start moving, we could see tier 2, tier 3 names also follow suit. But until that happens, I think the best thing to do is go with SBI. Can be bought at these levels, stop loss placed at 810, maybe a 875 kind of a move can be seen before the results. I assume the results are on the 8th of November, and before the result, we could see some bit of action happening in the same. Apart from PSU banks, it is IT names which are showing some kind of a bounce back. Last week, they saw aggressive sell-off, but at least in today's sell-off, further follow-up selling is not seen. The likes of Infosys, the likes of Naukri, these are some of the names that come in the top of our radars, where we are seeing selective buying being happening in the same.
Okay, SBI is one clear-cut idea coming through. Rahul, any other names at all? I mean, some of the stuff which has fallen sharply, from the beaten down names, or you'd want to buy stuff which has not fallen, the outperformers.
Yeah, so I think, we will stick to another pack. The metal space is something that is quite interesting. And one of the names that comes, something which is not corrected at all is National Aluminium. The stock has been, consolidating above its 20-day moving averages last 10-20 days. It has behaved as if no correction has happened anywhere. So, strength could continue, could change itself into outperformance. So, something like a 245 target can be expected in Nalco, can be bought at these levels, stop loss placed at 220. And this is one stock that is exhibiting a relative strength from the metal pack and can do well over the next few trading sessions.
All right, I think a few people on the funda side have also recommended Nalco, and this is coming in from you. Rahul, thank you very much for joining us for now, but stay with us. We're going to come back to you a little later. We're down 300 points by close. 23,990 is where we finally closed the session. The day's low came in at 23,816. So from the day's lowest point, it's almost a 150, 170 odd point pullback. So pretty decent. And we've managed to end above the 5th of August low. The 5th of August low was 23,893. Intraday swooned below it, but by close we've kind of ended above that particular level. So 1.25% low, but was looking much worse at one point in the day. Nifty Bank as well came off the absolute low point of the day, but still ends with about 0.86% cut. And we'll just wrap this up with the mid-cap index, 1.33% lower. And I think the small-cap index, which ends 2% in the red. Of course, I mean, the small-cap index is, from being down 10% from the all-time highs, it's recovered. So, as of today's close, I think the small cap index is down about 6.5% from the highest level. And that's largely because the recovery we saw over the last 5 trading sessions. Surbhi.
And what hurts more today is that we've been absolutely alone in this fall because most of the Asian markets have had a green close. China was up, markets like Australia are higher. Europe has been trading positive. The US futures, Wall Street futures are positive right now. This was an India-specific fall, and that's been the case for the last couple of sessions as well. Anyway, talking about stocks now. On the Nifty, there was serious drubbing when it came to a lot of the auto names. Hero Motors down 4.5%, Bajaj Auto 3%. Names like Reliance, a big move down for this one, 3% lower on Reliance. Reliance is now almost 20% off its peak. That's been the extent of the price damage. Hindalco, Eicher Motors, NTPC, Coal India, Titan. As you can see, it's cutting across sectoral lines. It was literally an all-fall down kind of a day. The Bank Nifty was also losing about 1% or so. Names like Axis Bank, for instance, coming under pressure. Lots of consumer names like Nestle, etc. So nothing was spared. HDFC Bank was down 1.5%. On the green side, very few stocks. M&M, of course, stood out after the October sales numbers. M&M about 2.5%. Some buying on SBI, Tech Mahindra, and Cipla as well. But the wider story is obviously mid-caps. Look at the kind of cuts that have come through. Vodafone Idea, 6-7%. Imami, Brigade down 5.5%. These are all the 5 to 6% declines. Gravita, CESC, Angel One, Force Motors, Edelweiss Finance. A lot of these slightly bigger, well-tracked mid-caps, all collapsing 6-7%, if not more. Okay, well, on that note, it's curtains on this edition of Closing Bell. Finally, a 300-point drop on the Nifty. But don't go anywhere. We'll keep getting you more updates on today's market action. Markets Forward coming up next.